Some fun. Hey, good morning, everybody. Welcome back to the rationalinvestor.co's weekend frivolity. I haven't done one of these publicly in a while. Keep in mind, we do Monday to Friday videos, about an hour and a half, and then we also do these weekend shows on Sunday. Saturday's technically my day off, so kind of chilling, and actually nice summer weather here in Vancouver. Went for a really nice walk yesterday, so just might as well get out and smell the roses. I'm encouraged by the price action that we're seeing recently, and actually I have on my screen here this morning. I'm hearing a lot of talk, and it's a little bit surprising, but I suppose this is the space. Lots of talk about the market going to new highs here and going to substantially higher levels than what we saw just last fall. And I thought, what the hell, might as well chime in, throw in my 2 cents. There's a few interesting things going on here in the market off of a longer term basis. It's definitely worth our attention. Is this sort of moon environment? I don't know. It just I've been through these cleanup corrections over the years, and usually it takes a little bit more than what we've seen so far to officially call the bottom. But, we might see some back and forth here. I'm feeling encouraged about that, so that's good. I have on the screen here this morning, and this is kind of one of the things that I tweeted out, and I'm a little bit shocked. But if anything, I hate to say it. Silly capitalist. I mean, we in crypto have actually lived a bit of a sheltered life for a while, and I don't think you guys realize that. But I put out a tweet, and like we have site members who are very smart and in like financial services industry and stuff like that. And I don't actually. I should, and now that he's here, so maybe I should officially ask permission. Kevin, was I? It was like a shill, right? So there wasn't a problem with sharing that link, was there? I might as well ask you since you're here. So you're okay, cool. So one of our site members, who I highly respect, think he's going to do very, very well down the road. He just has to understand how bull and bear markets work and time. Feel very, very confident that he's going to be making a lot of money in this space down the road. But nonetheless, he sent me an interesting video that I'll just show you here. And as I said just a moment ago, what I'm fearful of is we're starting to see sort of the capitalist machine step in on crypto now. And in a weird sort of way, I think, we've actually been a bit sheltered in this space over the past few years. When I first came into this space, I saw there was a few players in this space that sort of, came from that sort of Wall Street arena. They sort of knew how the game was played. But the capitalist machine hasn't stepped in. And I think that's actually what's happening here in crypto and Bitcoin now. They always say, careful what you wish for. You might just get it good and hard. In this space, people have been wanting, this isn't a sales pitch for these guys. I mean, I don't really care about them. I'll throw on the Twitter feed here, so for background while I'm blabbing away. In capitalism, once this sort of the capitalists get an idea and they feel like they can run with it, oh boy. These people are professionals, right? And you see them stepping in a big way. So ironically enough, actually, a lot of the sort of principles that we kind of teach in the program, you actually see them coming to fruition. Because we see where price is, and I always like to. It's really handy just to have our weekly Coinergy chart. This is such a nice, simple roadmap for us over the past couple of years. I mean, probably all of you guys have seen this chart. It hasn't changed for me. It's quite remarkable how consistent the message has been. And often too, of course, when you're dealing with weekly price charts, that's kind of handy to have a weekly price chart written up and you save it, so that at least you can, the message sort of doesn't really change dramatically from week to week. But our sort of, our reload zone concept, I think played fairly well here. And frankly speaking, in the messages that I've been sort of sending to the public through these broiler chicken shows are, dips down into the green box. You should be slowly accumulating this crazy ass thing. And I suppose with that last statement I just had at the end of there, that's why the public does, where like the media and stuff don't like to latch on to Brian, because I'll say crazy things like this crazy ass thing. But anyway, so the irony of it all is I don't think the bigger picture story has really changed. But what I find really interesting and what I wanted to comment in this video, and of course it takes Brian forever to get to the point, was if you need help and you're not really that active in the market, then these kind of people are actually not bad to work with. They'll keep you relatively out of trouble. In this video, he basically gives you 3 ideas to invest in the crypto space, and he says I have 4, but of course, perfect, the sales machine. He isn't going to give you the 4th until you buy his subscription. I mean, very, very well done, very well orchestrated. I bet you there was even a hands coach through this that said, no, you got to make sure your hands are in a very peaceful, non-threatening gestural manner when you're going through the sales pitch. It's quite remarkable, really. Seriously, dude. I mean, I was in the sales industry for 30 years. I mean, this stuff is orchestrated down to, how what is the pace of your breathing, But one thing I really liked about this, and Kevin even warned me, if you want sort of usable information out of this, understand that this is a huge shill. I mean, these guys, they got this down to a science, right? Now, I'm not necessarily endorsing them. You do your own due diligence. If these guys are comfortable and you can work with them, great, go for it. But I'm not, endorsing them. But what I did like was, and Kevin even told me, so watch about maybe 10, 15 minutes into the video. He tells you a little bit about his story, very typical, but they actually get into sort of the fundamental argument for why he thinks that we're near a bottom. I think, just for, if you guys watch this video later on, Palm Beach Research Group, whatever your name was, and then I just break the video, probably. One thing I would highly suggest that you do, guys, maybe they're going to take the video down now, who knows. But one thing I would highly suggest they did was color the Bitcoin chart in a color you could see. It was very difficult to see the actual Bitcoin chart. Oh, look at this. Anyway, maybe they think I'm some sort of spammer or something. But anyway, the point that I would make, and you guys are making that point as well, was just that, for about, I would say about like a good hour or so, there's actually some really usable information. And if anything, somebody even quickly on Twitter, when I put this out, said, well, why don't you just come to crypto Twitter and we can tell you all the levels. And that's cool. If you can figure out who the people are that you can listen to on Twitter that aren't trying to mess with your head, that's a whole other conversation. I think these guys, ironically enough, I actually think they speak to like the adult part of the community, right? The people that, as an older guy, I can see, some people coming to Twitter and trying to listen to Twitter and stuff like that. It's difficult. Even Brian, I mean, geez, I have some crazy ass, political views that I throw in my Twitter feed. So I can understand. These guys know how the sales pitch goes to be able to sell ideas to high net worth people that don't want to deal with, the Twitter kind of rants and views and stuff. They just want ideas. And, it makes sense why these guys are doing what they're doing. And what I kind of said just a moment ago is, guys, people in the crypto space, get used to this, right? There's going to be more of this, not less of this going forward. So I put the tweet out, and I thought, a big portion of this video here today, I just wanted to explain why I put the tweet out. I would totally agree with what some people said, just do your own due diligence. And I mean, it's not rocket science why these assets really are, in buying zones. And what I found really cool about that video was he sort of walked through the whole process of, we teach that in our programs, we teach that. And it was interesting because there was even one of our old students, and I really tried to help her. I sure hope she got value out of the program. But I was playing with her on Twitter. Institutions buy fill in the blank markets. Do institutions buy up markets that are screaming up? No, they don't. Right? Institutions buy down markets. And what's fascinating about this simple weekly chart is, our reload zone, the panic, the concern. And what I found really cool about that video, like I said, and I think it's worth everybody watching that 1 hour period. After about an hour, some like mafioso guy comes on that looks like, man, he's don't talk to him the wrong way, or you could end up in trouble. And I really shouldn't have said that, but anyway, nonetheless, a bit sales pitchy. But it shouldn't surprise us that their conversation in that first hour was about how the institutions are trying to get us to panic. And Mr. Dimon says that Bitcoin's a fraud, and yet we find out very shortly thereafter that JP Morgan's actually on the buy side. And other people in the financial services industry are, I think they were talking about like the IMF. They were using that Christine Lagarde as a good example, where the world should collude to destroy these cryptocurrencies. And then you find out later on that they're actually slowly accumulating positions, and all the various different anecdotes. The long and short of it here, and what I'm really worried in this space is that people are looking for, all right, here's the official announcement. Institutions are now buying, so you have the, the green flag to buy. And of course, capitalism never works that way. If Bitcoin price does work its way back up top, then, in essence, we'll look back and go, yeah, well, I guess we can see where the institutions reloaded. This is a weekly price chart. So, this has been like half of 2018. I'm not going to sugarcoat this, as it hasn't been pretty. But what I find really interesting is the tone. Maybe a couple weeks ago was kind of like, Bitcoin was yesterday's news, CNBC, Bitcoin's over, blah, 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 blah. And so what happens to price? It actually starts climbing higher. In very simplest terms, I always suggest to people there are two letters of the alphabet that help you as a technician in the market. And all they're doing is they're just trying to identify quote unquote trend. And that is, if we have a situation where you see, and keep in mind that the price chart itself does nothing more than just visually display the inherent demand and supply for an asset. That's all a price chart is it's just a visual representation of where supply and demand meet in the marketplace. So if we have a situation where the market is making lower highs and lower lows, that produces, our classic M top. And the more well-defined it is, the better. And then conversely, if you're a bull, right, we just simply want to look for W's. And if you think about it in just very simple real terms, this point right here is where supply overwhelmed demand, right? Demand was strong, supply came and said, hey, you want some? Here you go. And back down goes price. Then demand picks up and we go, okay, let's see, if they were really serious about supplying in that area. And if the market rolls over and can't break that high, it means that supply overwhelmed demand. And if we have a situation where the market sees that there's actually structure to this failure, i.e. Lower highs, like I said a moment ago, and then we get lower lows, then this actually, it actually validates a change in that supply-demand structure. Something has happened here where this now becomes a fairly significant supply wall, or ceiling in this case. And price wants to, ideally it wants to go where the path of least resistance, but it actually wants to do business. So if the market gets up into here and it just can't do any more business and it starts stalling out and we start seeing like failing volumes and momentum indicators starting to roll over, and then a new trend is established, well, price can go in this direction now and will continue going in this direction as long as we keep seeing lower highs and lower lows. The key here, of course, is the checks, right? There will, it's, they always say market never moves in a straight line. And you could argue that these checks are nothing more than just sort of a market's been pushed too far in the short term and has to relieve that pressure. If we get to the point where the market relieves the pressure and then we roll over and break to new lows, then it means that supply just keeps overwhelming demand. And then conversely, if we can get to a situation where supply is coming in, but demand stops that down movement, demand is strong, but then supply is like, okay, well, we're still here, right? And then they knock it back down, but demand comes in and supports this low, and we see that shift come in where the market moves up through where this supply ceiling used to be, i.e. a W, then we have now a new uptrend, right? And this downtrend will eventually just play itself out until we get a new uptrend. And that's basically how the capitalist system works, right? Just purely based off of supply and demand. So with that said, hopefully that's a nice little story for you to try and help you understand price action. Let's take all that off now. If we look at price itself, you can clearly see W new highs. Woohoo! And, if you want to, you don't necessarily need to buy on this date here. You can actually wait for the check because quite often a good structural level, this is what they call a Wyckoff check, the market will actually come right back down and retest that breakout level. Okay? See how I did right there? Like I said, a lot of people you can imagine, we talked about W's and trend, or like, the market breaks out and they go, gee whiz, if it comes back down here to that W, oh, so buy it, right? And that's just like traders trade. Beautiful level right in there. Tough trade. I'm not going to say it's easy. Got to build a plan. You got to say, all right, I like to buy W's. And if this thing does W, I'm going to place my open order to buy at that level. And if it comes down here, I'm going to buy and I'm going to risk against this low and I got to live with the results. And then, of course, you got to take appropriate risks on the trade, right? Are you a little old lady? Are you a Joe Sixpack? Are you a margin trader? You're going to trade on leverage? And those, of course, we discuss all those kind of different type of risk takers in the market. I've been telling you guys for a while now that I feel actually very comfortable. Little old ladies just coming in here and nibbling away over the next year or two. I really don't have a problem with that. And I also told you in recent videos that if you do take that approach, you actually are rooting for the market to come down. You want the market to come down more so you can buy more cheaper. And then if we think about our Palm Beach Sales Club newsletter guy, he basically outlines that, right? If you hear the mass media and stuff touting how the higher ups are saying it's garbage, but then you find out that they're actually on the long side and they're buying, and we hear more news about institutions coming in on the buy side, it shouldn't surprise you. This is exactly where the institutions are reloading. It's funny how after a while it becomes extremely cliche. Now, here's the problem with all this, okay, guys? Remember our conversation about M's and W's. If we change this to a line charge, let's call a spade. That's a big ass freaking M there. There is no, sugarcoating that. And you can see how the market tried to come down and test these. And, remember what I said earlier, we want like a nicely defined W. You can trade W's that look like that, but this inherently isn't that strong. So if you get sharp moves like this, you should at the very least expect these lows to be tested. And you can see doosh new low here. Doosh new low here. Now, this is encouraging. I like what I'm seeing down here, right? Everybody should look at that and go, geez, I think I recognize that letter of the alphabet. It's encouraging. It's good. Could this take some time to clean itself up? Usually they say markets like to saucer bottom. Now I can understand, extremely volatile asset. This thing could easily be bouncing some serious thousands of dollars in here. I do find it interesting, and we kind of adjusted, especially with that Bitcoin dad crazy ass candle low. We had the bottom end of the range on this sort of weekly bar low, which I really like. I have a feeling that's we like to call that an institutional fingerprint or institutional footprint. So this is an area that somebody, the market was coming down here, and somebody said, no, we're not done here. Up you go. So here was the Bitcoin dad testimony in front of Congress. Bitcoin's not so bad. Don't beat up on these kids. That was that low there. That big tail. Problem with tails, right, is they always say wicks and tails like to be eaten. So really the question ultimately was, if this was the bottom end of the range, could we actually get like nice candle bodies in here and some nice structure coming in here against the low end of that range? And I think we just got that. So that's encouraging. This is a bit fast. I'm a little, as I said just a moment ago, ideally I would actually like to see this thing like saucer. And if it's going to bottom, then fine. And what I'm hearing is there's guys that are actually thinking that, the Palm Beach Club guys, whatever, that are thinking that we'll actually see a breakout and a move to new highs, and they have substantially high price targets. Okay, so be it. I suppose one could argue, maybe that's a very violent V bottom, right? And that would actually correspond with that low. So maybe market symmetry, that might be doable. Me personally, I would actually prefer that this bottom look a bit more, cupish and nice and structurally sound down in here. Only time will tell. And really, I think it, bless that gentleman's heart, and I suppose we're going to see a lot of that. Bulls will make bull predictions, and if those bull predictions come true, then they look like geniuses. Billions of dollars flows into them. Woohoo! I've also seen, there's plenty of people that make crazy outlandish predictions. Like I said, if they come true, they look like geniuses. If they don't come true, it can be career ending. So I'm not really the biggest fan of making outlandish predictions. I will say one thing, that I like to put myself into a position that if the market does blast off to new highs, then I'm participating. And that's often why when I go and buy stuff, I'll sell half on a double kind of thing if I'm building a longer term portfolio, so that I always have a little bit of skin in the game. If anything, I think, I'm a big fan of sort of market symmetry. And we can actually take a study and sort of, maybe this saucer bottom is how we play out. I don't know. But if we, just look at some, say, market symmetry through the Bitcoin dad bottom there back in the spring, even just maybe to this pivot low, and we just sort of replicate that price data. And then if we, there is that price data. And then I think, if I'm not mistaken, we can flip this over. And so if the market is going to move in this sort of symmetrical fashion, then price action should probably look something along those lines. So I don't know whether you can see that. Can you see that on the YouTube video very well? I don't know. Actually, I'm not even presenting to everyone. I don't even know if anybody's even watching this. I'm just having fun. You guys getting any value out of this? I don't know. Actually, we've got a few people in the lounge. Loving this, Brian. Oh, that's good. Awesome. How you feeling this morning, Shane? Nice to see you. You getting ready for the bear? The bear's hitting town the end next week. Okay, good. Good to hear, Kevin. Isn't it interesting though, Kevin, how that gentleman's timeline, it seems a bit odd that Jamie Dimon would actually come out and say Bitcoin is a fraud? Fraud is a really big word, isn't it? Doesn't that seem like, gee whiz? If it was an individual that he actually said you're a fraud, that would actually be grounds for defamation of character lawsuit. I mean, that's how serious that word is. So, and then how ironic, right? we find out that literally within that same week, and it's like, if you work at JP Morgan, you're going to get fired if I hear that you own cryptocurrency. But we find out in the same goddamn week that they're setting up trading desks and are heavy on the buy side. I mean, come on. So I thought it was really cool, Kevin, watching that video that you told me how they did that timeline and walk through everything. And literally everything that we teach in our school programs about institutions buy down markets, how do they engineer the down markets? They go onto the public media and do crazy things like Bitcoin's a fraud, which, is a sort of a statement that you can't really defend because technically there is no one person, right? They use the media to manipulate. So what a surprise, basically down at the bottom end of the range here, they've got everybody all sort of, Bitcoin sucks, right? And look at the way you can't fucking give away an altcoin right now, right? Isn't that interesting? I mean, how quickly this space changes. I find that fascinating. I mean, and that's the great part about investing in venture capital, right on the cutting edge of capitalism, is that when the markets rip roar and these things are going just parabolic straight up. But on the other side, of course, when they're cleaning the market out, you can't give them away. It's fascinating how capitalism works. And I remember back in like the late 1990s through the dot-com boom, there was a scandal in the Canadian gold market. And you could not give a gold stock away. You couldn't give them away because people are like, oh, no, that's another Bre-X. No, I don't want to touch it. That's a Bre-X. And yet, of course, you go, hey, if you're watching on YouTube and you want a fun project, go look at what the price of gold did and what gold stocks did through the late 1990s there. It's quite remarkable. Okay, so back to our story here. If this market's going to move in a symmetrical fashion, I mean, keep in mind, guys, and, does it make sense off our weekly chart? We've been talking about this price range forever, haven't we? Right? Even you guys just watching on YouTube, I mean, we've been talking about this basically these two bounded lines as our range for like the past like 3 or 4 months. So should it surprise us to see that if the market has accepted, and I guess let's draw them off of here. If the market has accepted at the bottom end of its range, that we should, does anybody know? Actually, it's interesting. Let's see if anybody even on YouTube knows. Somebody's not a student, so let's see if there's anybody even on YouTube that's not a TRIer. If we've established this as a trading range, what is the statistical odds that the market will come down to the bottom end of the range, turn, and then head back up and test the top end of the range? Anybody on YouTube? I don't even know if that's still working. There's a cool name, Considering Fleabass. I don't know. I don't know if I'm even looking at the right YouTube page, but I think I got it open. This might have been a different one, though. Anyway. Yeah. Oh, well, good, Andrew. But I said you weren't supposed to be a student. You're not allowed to answer if you're a student. Anyway, I don't know if this YouTube page is correct. Something doesn't look right about here. Is there anybody on YouTube that? Yeah, I'm going to type in here. Anyone here? Oh, yeah. Oh, I guess that is the correct one. Oh, well, I'm just having fun. Burns is over there. Yeah, I see there's a few students, right? So everybody who's watching over there is just students. The public, they couldn't give a shit about what I have to say. Okay, back to our story. So if we do a market symmetry study, I think the odds of us testing this level here seem very high. Hello. Somebody's got the microphone on. Does somebody want to come and say something? Damn it, Brian. What are you doing? Who was that? Joshua. Oh, well. No big deal. It's all good. All right. So the point of the matter here is, and what's really cool for the level oneers is, remember we talked about weekly W's, right? Hopefully you guys can really see how important weekly W's are for establishing trend. This is a cute bottom. It came in awfully fast, and it's awfully crisp, right? If we change that back to a line chart, you see that crisp W there. And if you listen to those Palm Beach guys, they're calling the bottom here. I think that's a bit dangerous. We heard was it Barry Silbert? Wasn't he on CNBC or something calling the bottom? We're getting a whole bunch of people calling the bottom, which scares me a little bit. And you know what it kind of reminds me of? And I wanted to show you the guys this. Let's see if I can show you that. It reminds me of woo, look at that nasty bear div coming in on 15 minutes. So everybody who is a trader out there, if you see a bearish divergence like this on the 15-minute chart, you are best to cool your jets if you're a bull. Hopefully you're in trade setups and they're just working away here. But wow, that divergence just confirmed there. Probably just as I started talking, coming up with those crazy ass bull targets, right? Well, the market's moving up. Bang. Put in a top there for you. But I wanted to show you guys the weekly chart because this reminds me a lot of when we put in our bottom down here. And actually, it's interesting. From one exchange to another, we have different reporting. If I actually do this off of Phoenix, now keep an eye on this bottom, right? So we went down, up, down. Then we had a cute little double bottom in here and then a breakout. And then notice these lows down in here, right? And you can see on Stamp, they took out these W lows. If we change this to a line chart, you don't even see it. So, that's this scary thing that I see right now is, you can sort of see the similar type bottom that's forming here, especially this kind of action. I'm just worried about the dump that has to come against these lows going forward. I don't know whether that's the best example to show you. I'm a little worried about this kind of action in here. Like I said, a lot of people are calling bottoms. On balance, I think maybe we could, be close to some sort of bottom. But could I see a nice little FU against these lows here just to see if we can wash out some weekends? That's definitely possible. And I really don't like the idea of chasing price up in here. That to me is a bit problematic. And so I guess that's, maybe we should go down to lower time frames. Like I said, higher time frames, we're getting some really interesting technical anecdotal evidence. And I actually just tweeted this out. We have technically made lower lows in price, but our momentum indicators, in this case, this is a MACD histogram, slightly altered levels. I like to use the 9 and 30. Gives me a little crisper numbers, but we can put it back to the default. So you can see that because this is how you'll probably load it up when you just load up like a charting service like TradingView. I don't like, especially this is a weekly chart. Remember I had said earlier that our W's, if we really, believe in them, I would have actually liked to see a really nice test of this low and then a turn up. So, your grade 3 English teacher goes, yep, that's a good looking W. This is technically in divergence, but I wouldn't be surprised once this sort of plays itself out that we do come down and test this low in earnest. Be careful of that, okay, guys? But in the short term, and this is interesting because this is one of our students picked this up about a year or two ago, and we tried to make him famous. And in that we call his setup the Devo. And we, what's cool is on the site, we have like people that build scripts and stuff like that actually can hunt this stuff. And Sjord was telling me that he was working on a Davo indicator for the new site coming up. So we may even have that on the new site. But if you can see a W in Willie, and of course, Willie going stupid on the weekly charts. Hold on, I got to sneeze. There we go. Actually, that was only 2. Thank you, Andrew. Appreciate that. We don't even see Willie go stupid on the weekly charts very often. The last time we saw Willie go stupid on the weekly charts was back here in 2015 at the bottom. So that's encouraging, right? Long and short of it here. And of course, remember our conversation about, what is Jamie Dimon and all them, institutions want you to do. And what do you think the public's doing? Well, probably the public was panic selling through this. And I can tell you the sentiment in the altcoin space is pretty negative right now. So this lines up perfectly with what we're seeing here. But short-term wise, if you ever see a W in sort of your, this is what I like to call a momentum oscillator. It just oscillates between overbought and oversold. It's heavily modified Williams percentage R. So if you're watching this on YouTube later on, don't stress too much about it. But you can use just an out-of-the-box RSI or Williams percentage R. If you happen to see a W or stochastic, you could use that as well. If you have to see the oscillator, which measures price, put in a W. And if you can throw on a moving average and the W is confirmed by a moving average cross, oh, super sexy, super sexy. And you have on a volume oscillator. In this case, I happen to have the OBV study. It's not the best. It's more of a MACD type indicator in that it doesn't have absolute maximum and minimum. So I wouldn't necessarily call it like a textbook oscillator, but nonetheless, a nice gauge of money flow. And we've just found on the site, and Da Vinci in particular, he just fell in love with this in the last crypto bull. Whenever you get W's in both volume oscillator indicators and price oscillator indicators, it can often be a really powerful short-term setup. The problem here, of course, is that the setup is already well underway, right? And everybody on YouTube should understand that. On a daily basis on the site, we've been talking about, and probably the best one to show you is over here. We've been talking about well, I mean, we've been talking about it across a bunch of markets, but hopefully everybody can see this. And this is what we call a market in transition, market structure pattern. Something is shifted here. Remember we said on the weekly charts, we got that weekly W working. We're in reload zone. You know, this at the bottom end of the range. Well, this is often what those market in transition patterns look like. In this case, this is a very popular pattern that we teach in our basic technical analysis modules, the inverted head and shoulders pattern. And here we are up here. So the problem is that the inverted head and shoulders pattern signal fires, in this particular case on the MEX contracts, that's at like 6,800 and change. Really, I would argue just a break of this high. Hopefully you also see on YouTube that the break of this high is also a W. And then I think, if I'm not mistaken, about a month or so ago, maybe it was a month, maybe it was a few weeks, I know definitely on this site we were highlighting, the trader's trade. If we use that reload zone concept, you can see, remember we said markets like to test the other side of trading ranges 70 to 80% of the time. So, you can see that, the traders, they got given their trade right through here, sort of that midpoint of that reload zone Brian's always squawking about. I'm not going to say this is an easy trade. This was a difficult trade, no doubt about it. And really, the only way that you can really effectively take a position like this is you got a plan. You have to have it in your trading plan well ahead of time, all the risk levels, the amount of your account that you're going to risk, your entry level, your stop level, and you just got to live with the results. And, I've seen lots of people that have turned themselves into just kick-ass traders by doing that, but just on the fly on this day saying, okay, yeah, I'm going to buy, but you haven't planned ahead of time. You're not like waiting for the level to come in with your open orders working. It's next to impossible to do. Because keep in mind, on this event day, when price was tanking into here, what do you think the public was thinking? And what do you think the general emotion was in the space? I can absolutely tell you. People are like, oh, fuck, man, we're going to zero, goddamn son of a bitch. But it turns out that was actually the pivot. Now, can you build a trading plan to force yourself to act through this event? Especially people watching on YouTube. That's the secret sauce right there, guys. Build a plan that works 60 to 70% of the time, what we call a setup. And I don't know, on YouTube, can anybody on YouTube just let me know that you're actually there? What did we say? Markets range? About how often is this market going to test these lows, then turn around and head back up and test these highs? Anybody remember? So Brian's first rule to win at this game try and figure out some sort of system that, call it a setup, whatever you want to call it, where at least 66% of the time you got a pretty good shot that what you want to see happen is going to work. And what's really cool about this range trading setup, and as I said before, I'm not going to sugarcoat this for all you people on Twitter and stuff like that. Don't fool yourself. This isn't easy. Managing money and stepping in and trading professionally in the market, nobody said this was easy. But the point of the matter here is that these tools do work. In this particular case, you're going to risk against these lows. There is your risk box, right? You're going to look for a test of the highs, and you see that was basically a 2-to-1 risk reward. At this point here, if you actually hit this and you saw the market turning, you feel so fucking euphoric, I can tell you. I'm swearing like a sailor. Sorry, YouTube. Better put an adult warning on this video. But what I love, if it's possible, if you can get to this point, is force yourself to sell like half the position at this 2-to-1 objective, and then move your stop to your entry, what we call scratch, on the remaining, and just see where the wind blows you. You might be surprised down the road, this son of a gun just takes off like a rocket here, and you're long from this level forever. You never know. And that's how I took $500 and turned it into like 200 or 300 grand on the website, just trading these Schultz coins, basically with that same principle. So anyway, back to the story. The head and shoulders is basically in. I don't know whether it's really the best idea. You can see that technically speaking, we're bumping up against what we call our first stop target, the 38.2. We affectionately give it the name Ray Barbecue level, Ray Burchett. I've talked in the previous free videos about the importance of that level. So go back and watch them to learn more about Ray. Coming in against what we would call like a liquidity pool. What do we mean by that? This is an M top. That there are guys that are short off of this level, and their stop loss orders are just going to be right up against these highs. In fact, we teach, trend continuation, although I think this has played itself out. We actually would suggest that you use the 3 high-low method to move stops. So, based on this, and I don't know whether we would go off of this low or not, but 1, 2, 3, right? I can see stop loss orders just sitting right up here for a lot of position traders. The point here is that there is a lot of, think of it this way. If some guy bought this level and he wants to make money from trading, right? If he can push the market up into this level, there's going to be people that are going to be short. Their stop loss orders will mean that it will turn into a market order to buy if this level is tripped up. That's stop loss order. So if this guy is long from here and he wants to take profits here, he can encourage the market, keep buying, push it up into here, and he is going to sell on those stop loss orders. This is a tricky concept to understand for new people to trading, but in essence, this now becomes this level right here for sort of the professional trading community. That's not what I wanted. What I want is... well, I don't have it. Darn. Where's the magnet? There it is. Right? This level here now becomes like, it's like calling to the market. Wow, wow, wow. Actually, and you might even argue that this run here, look how close that came to that high. Remember we had talked earlier about M's and W's. And how, in essence, this is really important information for traders, because this is the last time the supply and demand dynamic was really tight, formed an M, and this supply overwhelmed demand. So if this really is a bull and it's going to push up here, this is a huge battle point. Now the momentum is still pushing up. The volume is still relatively strong, so it hasn't tapered off. We're not seeing divergence just yet off of this time frame. So on balance, I would expect the market to go after these, right? And then we use an expression on the site, and then we went after the stops. And so that's sort of what I think's going on here. And another great way to see this is through the Chicago boys. I was tweeting this image out, so this is actually a really cool conversation to have with you guys. We have one of our modules in our education program is all about trading with gaps. One of our site members just fell in love with gap trading and gap theory, even before he even took the level 2. I don't know, Joshua, are you even in the level 2 yet? But he just, if you want, he's not even yet. So hopefully, when he comes into the module, we can even add more stuff to his repertoire. But nonetheless, the point I'm trying to make here is even the kids on the site went out and found really cool outside references that I didn't even know about. And Joshua, I think you found like an article where somebody put a study together, and it turns out that something like, I don't know, 90% of the time or something, gaps are filled in. I can tell you from my old futures trading days that 91.4. Thank you, Benjamin. That's good. Should probably put that link, if we can find that link to that article, in the comments of this video. But anyway, when I used to trade futures, there you go. Look at that. Oh, man, you guys are so hip. I swear, you're so quick on this stuff. Where can I do that? I don't know where that loaded. Well, let's try a new window. There it is there. Gaps always get filled. Well, you can't say always. You can never, ever use the word always in the stock market. Or, I suppose in the crypto market too. This, like we used to always say, never say never. Never, ever, never, ever say never. Same logic works with always. Never say always. In fact, back in and I'm sure I've told you, YouTube audience, I tell the site people this all the time. Back in the 1970s, trading commodities seasonally became really popular. But then we went into that particular cycle's peak, and commodities went absolutely crazy, just like Bitcoin went right into this very anticipated, very normal cycle peak. Bitcoin went nuts. Is the nutso-ness finished? That's another conversation. I don't know, but as I told you, there are people here today that are shilling out the idea that no, the nutso isn't done yet. But anyway, where was I going with all this? Oh yeah, funny story. I used to be a commodities broker, and all through the 1970s, people, the old adage was, you bought your unleaded the middle of February, sold it the middle of May, you made money 9 out of the past 10 years. And it's a pretty simple seasonal sales pitch in the commodities business to get somebody to buy unleaded gasoline in the middle of February. They do it like through the eggs, the grains, the meats, all that stuff. So the point here is that, they used to sell it in the 70s like it's guaranteed, right? Because it's seasonality. It has to be. Then we went through the crazy-ass cycle peak in 1979, 1980. And, if you want an idea, actually, I was doing this recently, and somebody actually, I don't know if I still have it or not, but if we just go, the gold market now looks like poop because Bitcoin ate its lunch this cycle. But back in the last fear cycle peak, when people didn't want to own financial assets and wanted to own physical assets, kind of exactly the same thing that we just went through this fear cycle peak, the gold price went absolutely nuts. And it was interesting how there was a gentleman, that Peter Schiff, and I was sort of tweeting out and stuff, comments about him. I thought it was really irresponsible of him to say that, Bitcoin is totally different than gold, and gold's never acted the way that Bitcoin acts, because that's a load of horse shit. I mean, I can tell you, I remember because my old man was like a gold bug, like crazy. Oh, buy gold, hard money, hard money, hard money, rah, 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 rah. And of course, he got trapped, right? And the interesting thing about gold is that there is no happening. So there was no rescue for him. So, in an asset that really isn't going to change its physical form or its physical value, all the gold bugs, they literally got trapped for like 20, 30 years underwater. Well, 20 years, right? And that's the way cycles are. The good part about crypto, of course, especially if you buy POW coins, technically they have built in, they call it deflation. I would call it inflation, but that's another conversation for another day. So, the problem here is that through the end of this cycle, the commodities went absolutely crazy. And so as a result, a lot of people who played the seasonality plays, kind of like what I'm seeing in altcoins right now. Bitcoin went absolutely nuts. And, you should be able to see the comparisons. In fact, I think Shane actually did up a really cool chart on Bitcoin and gold. And actually, Shane, didn't we want tomorrow? Can you give a presentation on that in the daily brief? I'd love you if you could do that. Can't? Oh, crap. Oh, well. Maybe another day. Tuesday? All right, Tuesday it is. Somebody remember that. Let's get what happened here? Somebody remember Tuesday for me if you could, please. Okay, so once upon a time, here's a crazy ass Bitcoin going through its nutso phase. Woohoo, party on. Yeah, I just want to close all this stuff. So you can see a lot of the similarities in the 1980 gold market. And also, too, maybe this takes a year or two to clean itself up, actually start forming weekly W's, yada, yada, yada. And I noticed that a lot of people are like, well, where's the seasonal bounce in altcoins? I thought altcoins are supposed to always rally through the summer. And there you can see they're just sputtering, right? Because, when you go through these absolute insane face rips, a lot of the time seasonality has to be put on pause. So it's a tough message to tell the community. But nonetheless, would it shock me? Would it surprise me if, as like sort of Alex Stirk likes to call it, we have a developer cycle where the alts don't go nuts for a year or so? That is very possible, and it wouldn't shock me. But at the same time, too, remember, I am in there nibbling against low ends of ranges. And actually is interesting, even like Ubic here, for example. I'm a trader, so traders got to trade. So here's a coin that's basically right against its historical low end of its range. And I'm willing to take a shot off this W, right? If you change this to a line chart, it's as plain as day. All right, down, up, down, breakout. I'm willing to take my shot, and I did. I don't like the fact that we have a bearish divergence confirmed here on this event. Boo, it says boo. But hey, I'm a trader. Traders got to trade, and I went in here, I bought some, and I'm willing to risk against these lows. If this W breaks, I'll walk away. I don't have a problem with that. I really don't. But at the same time, too, am I like expecting this to be a seasonal bottom and everything to just start face ripping straight up? No. I will say, though, on the shorter term perspective, and maybe that's a good segue, I'm seeing a lot of constructive price action here across a lot of these alts. And I'm also looking a lot at these alts versus US dollar. It's a little tough right now with the price volatility in Bitcoin. I mean, you can see this is Bitcoin alone. For us to do a lot of valuation and feel confident in our valuation models relative to Bitcoin. But if I start seeing, especially on names like Cripple, I noticed Cripple was trying to bottom. Yeah, this is a really interesting name now. I had actually tweeted out through the weekend that I was a little concerned that people were a little aggressive in calling a bottom on this one. This is Phoenix. Actually, this is interesting because if we look at the actual high lows, you can see there is a W that did come in. But if we change this to a line chart, you can see that this was actually a lower low, right? Clotheslines. and this was higher high, and so that painted this kind of image to me, which scares me, right? This is what they call a megaphone, and megaphones are notoriously difficult to trade. They usually have to bounce back and forth between these expanding wedges, giving everybody, oh, I'm a bull, all right on, and then they go and break everybody's hearts and bust the lows. The good part about what I'm seeing here is that, of course, we had this fundamental event, which is sort of what I was concerned about here in the short term. And we've been actually talking about this for quite some time. The G20 event. Does anybody have and it's weird how this G20 event has gone very quietly. Nobody really seems to be talking about this. And I even noticed people in the lounge are like, doesn't that seem odd? Nobody on Twitter is talking about this G20 event. So if anything, if nobody on Twitter is interested, nobody's caring, and nobody at this G20 event, it's supposed to be the finance ministers talking about the future of digital economy and making the system fair for everybody. And then, of course, part of that was their roadmap of how they were going to regulate cryptocurrencies. I think actually I put a tweet out about a week or so ago relative to this, and it almost felt like, whoops, that's not what I wanted to show. That's my trip. Where was that? Was that over here? It almost felt like on the release of this event, it was a while ago. Where are we here? Man, this guy got so owned by crypto. That's a great story. If I was going to write a book about crypto, writing out the Twitterverse just crapped on his head. And it got to the point where he's like, please stop, go away, stop. I thought that was hilarious. But anyway, that was this. And I got to give a shout out to this guy. Everybody on the internet should give a big shout out to this guy, the crypto dog, man. He just owned this politician. That was beautiful. Way to go, man. I'm so impressed. But about a week or two ago, where the hell is it? I suppose we should talk about this before we're done here. This is another one of these sort of that gentleman. Well, here I got to show you this, and then we'll go to that. So where the heck is it? Here somewhere. Here, there it is. So it almost felt like the day that they issued this report, people were like, okay, phew, they're not going to crap on us. Hey, Alexander, nice to see you, buddy. Am I going to see you in Amsterdam? I think that's my Dutch Alex. Is that my Dutch Alex over there on YouTube? Fins up. Anyway, I don't know how much of a delay there is, so probably they don't want to do this in real time on YouTube. So, Alexander, if that is you, just post something that that's me, because I expect to see you when I'm in Amsterdam. Okay, where was I? This is sort of the crux of what I was talking about just a moment ago with this G20 event. And it's fascinating how I don't really see anybody talking too much about this. It seems a bit odd, but I noticed that when this was sort of put out, everybody sort of breathed a sigh of relief. Oh, phew. That the G20 guys were not going to crap all over crypto. So I don't know whether this release was sort of that conduit, but I did notice that basically at the end of business on Friday, the whole market just went right. And here's a good example: Ripple. Okay, considering Fleabus. That's interesting. I could take that. Steak dinner. Oh, cool. Well, I don't have many days, Alexander, so we've got a lot to do there. So just get into. I don't think you're on. We should probably get you in the Telegram Dutch group chat so you can coordinate with all the people. I don't know whether you know San, but you should reach out to San and also obviously Sjoerd and Sunny and Tom and Ivan and all those guys. So try and hook up with them, okay, Alexander? And maybe I'll see if I can connect you guys on Twitter or something. Okay, sorry about that. Anyway, so the point here is that, that was a megaphone. We're heading into that G20 event. Hopefully everybody can see this is what we call a fractal, where this candle here made a higher high than this, but this candle here made a lower high. So you got and actually here's a cool little freebie for the public. There are actual tools on sites like TradingView. Oh crap, I gotta refresh this. Anyway, you can select. It's called the Williams percentage. No, it's the Williams fractal tool. I think they call it. All right, we're over here, right? So you can come up here and you can go fractal. There it is, Williams fractal. And it's tough to see the coloring, but let's change it to bold and beautiful. Yeah, it's hard to see that, eh? There it is. Anyway, okay, so you can see this little tool will actually help you see that fractal. And actually, I think our level oneers were just doing that, if I'm not mistaken. I don't think they were doing candlesticks this week. So anyway, the point of the matter is, actually that's pretty timely, eh? It's not really the best example, but what do we call this 3-bar pattern? Actually, I suppose you could, but this is probably a better one here. But we'll call it a fractal. You could also call it an empire. Long and short of it here is this is a sell signal if we fail through these lows. And probably if we drill down to like an hourly chart, you see like a head and shoulders or something. Let's see what that looks like. Yeah, there it is. So you can see the fractal, eh? It's actually pretty well defined. So that was clearly a fail level there, right? And so that was heading into this G20 event. And, like I kind of posted on online, I mean, no offense to the good people at Cripple, but I still can't figure out what value is on this thing. And also, too, it's very hard for me to participate in this decentralized story through a heavily centralized cryptocurrency. Does that make sense? Shane, does that statement, what I just say, does that make sense? It's almost like you want to be part of this crypto story and the decentralization of authority in this space and trustless. But if you participate with crypto, you have to buy into centralization of authority and a heavily manipulatable. Is that the right word? I don't know. I mean, there are people that really like Ripple. I can't figure out though what value is. It doesn't make sense to me. Anyway, technically speaking, but some argue otherwise. Okay, cool. So actually, I'd be really interested to hear what the fundamental argument of value on Ripple is. Anyway, so the point of the matter here is we were coming down like a freight train into that G20 event. A little bit scary. And then, hello. This is interesting, actually. I'm a bit surprised. Maybe we have to finish this candle here, but this is technically a fractal going the other direction now. So I'm not quite sure why the indicator didn't fire there. So this is what I like to call an inside bar. And for aggressive traders, this actually is a buy signal on a break of this candle. And you risk against these lows. Just that little fractal right in there, right? So if we actually drill down to lower time frame, what is that? It's probably like a W or something. Yeah, okay. So you can see market tanked. And actually, there's the cute little W, right? The level if you're trading off lower time frames. Rallied back away, came back down, put in a double bottom, and broke out through that high there. So I can understand that would trigger, especially this W right here, that would trigger guys for a trade. I don't know whether I really like this anemic volume. It looks a little suspicious. And, we always say, you should have 3 reasons for a trade, not just one. So you got to trade appropriately. But I guess the point that I'm trying to make here is if the G20 wanted to crap on this space and just say, we have to, buckle down and, in this particular case, coins that are heavily, centralized, we have to have them, maybe be monitored or something like that. That could have just dumped this thing hard. But, as I said, now that maybe if we're really lucky, we actually can print higher closes. Can everybody see how now we have the makings of an actual clothesline W in there? Instead of megaphone, we now could potentially get W's. So that's good. That's encouraging. I was really worried about this dump into this event. And then, of course, very simply put, if you are, interested in hunting this thing and you've been like, I really wanted to pick some up, the traders out there, as we sort of pointed out a moment ago, can everybody see? And actually, this isn't, I can see two reasons. My hunch is if we look at momentum indicators, we're probably in divergence. So maybe we can even find three reasons. This is a really good example of, we can even go against this low here. You see how we now have trade location, good old reload zone. You've got an inside bar to work with. We now have this kilo, this kilo, this kilo to protect you on the downside. Actually, I really don't mind this trade. Something like that to there. I'm endorsing Cripple. What the hell? Cats and dogs are living together now. All right. So let's put that trade out there for people to chew on. I remember actually we did a video probably about a month or so ago. We outlined an ETC trade, and that trade's actually just working away. So here you go. Here's another trade idea. This we'll call this the trader's trade. I think investors, you need to wait for this clothesline W to confirm. And frankly speaking, I mean, if we zoom out, the difference between the investor and the trader's trade, I mean, you can't even see the difference. I think if anything, if you're an investor, little old lady kind of going slow and, hey, I've been nibbling here, but man, it's been tough. Well, maybe wait for the W to actually come in and just buy on a break of the W. The trader, hey, I want to, hunt these low risk, high relative reward setups here. Well, I think one's coming in here. I would like to go and look at some momentum indicators and see whether we have some divergence to finally sort of validate. Be nice if we got some sort of, like W and OBV, that kind of conversation. And then finally, structure and location. Actually, I don't really mind this trade. It's actually not that bad of a trade idea at all. And I think what it's predicated on, of course, is the idea that the G20 people just don't shit on the space. So that's just one idea that's floating out there. But I've noticed a lot of W's. Look at this add up. Beautiful W, right? There's yield Bitcoin. There's that W we talked about in the head and shoulders. XMR even has a W working. Imagine that. Ethereum has got a W working. And what I like is, they brought the market back down. Inside bar. And just right off to begin with, they fired this inside bar bullish signal. These all happen to be Phoenix levels, so if you are watching this stuff on Phoenix charts, but I also like to watch all of these guys, not only on versus Phoenix cash. I like to watch them. This is all the tether instruments, and there is that cripple inside bar there that I just talked about off of the tether name. Verge is looking really interesting. Now, I mean, I'm not here touting Verge's horn that, they're going to be the next best thing since sliced bread. Just a trader, just sort of looking at the market. High, low, you can see the reload zone. And, if this G20 event turns out to be a total outlier and, backing up coins so institutions can buy, you can see in this particular case, though, you can see that we made a lower low. So we can't call this an inside bar. We actually have to wait for this candle to finish And the signal, if this candle finishes like this, where we have three, pivots like this, kind of like what you saw up here with the sell signal, if the market can finish the day like this and then turn up through here, that will be your fractal signal. But it was just interesting earlier in the day. I was watching Verge was just rocking and rolling here. So we'll see if he holds in. And then again, like we sort of said, the interesting thing about taking shots down here, and if we break these lows, well, fine, just get the hell out. Can you guys see that just even bounces here? Right there's the reload short zone just off of the range since April. So what is that? That's basically a better part of 10 cents, right up in there. Probably big fat round number. Maybe we hit that into some sort of orgy event. And here we are at 2.25, right? So that's a 4-bagger right there, which is sort of interesting because this kind of plays along the lines of that stuff that that gentleman was sort of talking about earlier. That video that I made reference to. One of the names that he sort of threw out as sort of a bone to everybody is I would take a really good look at Litecoin. Here it is, $83. And if anything, this is actually a really good example of value. I don't know whether I necessarily agree with that gentleman on this one, though. It feels like it's a bit early, and somebody just pooped on this thing through the middle of the week there, kind of knocked it back down. Bitcoin's up against its short-term moving average resistance here, so it's tried to accept. I don't know whether Litecoin's accepted back above here. You can see that the that same weekly Davo that we talked about on Bitcoin, you can see it trying to come in here on Litecoin, but it's just not there just yet. And if anything, what I'm worried about here is notice this moving average cross, right? And of course, Bitcoin has it too. You'll notice that we got sort of that same sort of moving average bearish cross here, right? And we had to take some time and wait for it to actually cross back bullishly again. So, I don't know, and keep in mind, this is, over the course of the summer and the fall, maybe this cleans itself up and crosses back bullish. Kind of like Bitcoin, I do like the idea of us testing the top end of this range at some point. So if we do accept back up, notice how that's just going to take us right into that sort of 30 weekly moving average. So I can see the battle points here. I could see a trade here. I just don't know whether we're ready to ratchet all the way back up top here yet on Litecoin. Now heading back to sort of the trade, what I noticed on Litecoin, where the hell is it? There it is. We have one lady on the site who absolutely fell in love with our trendline setup that we had. And, I love to encourage people. So we actually changed the setup's name to LJ's in her honor. And in essence, what you're looking for is 1, 2, 3 tests of a key trend line. So you can see the top, there's the second one, here's the third one. And now what we really want to see is we want to see structure on the other side of this trend line. I do, like for the trader, slightly different than that investor off the weekly chart. I do really like the idea of hunting this reload zone. In fact, actually, I probably wouldn't draw it there. I'd draw it there to there. So hunting this very wide reload zone. Geez, I guess it goes all the way down to there. I got a couple on here. What's this one? Oh, yeah, I think I would do the whole range, there to there. Whoops, fudge. I do like hunting this reload zone for buy setups on Mr. Lee's coin. I would love to hear that Mr. Lee has come back into the market and he's bought back his position. I wonder, and we were talking about this on the site video, I wonder if this gap needs to be filled in though first. A little bit cheeky. And I don't like how, all those other coins, they're inside bars and all this. I'm not getting that kind of action off of Litecoin. If anything, maybe I'll get a fractal reversal if we can get up through this high. So we have to finish this bar because we made a new low here. We have to finish this bar. Then tomorrow, and that opens up in about, well, I guess about 3 hours, we go beep, right? And then if we tick up through there, then that fractal fires. I don't know whether I really like the trade location here, though. That looks yucky. I like the idea of working bids down in this level, but if that's the case, then it means that, the altcoin market could be soft for a little bit more here. So, that's my Litecoin thinking. You can see there is a W working here. So the trader's got to trade. I can completely empathize if people are like, well, Brian, I'm totally hunting longs. And if we do a trend line off of here, again, fill that gap in. I really like this area. So what is that? That's like $77. But I'm thinking trade here. I'm not really thinking that the bottom is in. And that's what I'm worried about with Bitcoin. I think that there is a trade here. We're going to run up against these, same sort of thinking with that Litecoin, reload zone shorts. But I don't know whether the trend is completely turned. I wouldn't be surprised, like Bitcoin will rally up against these highs and then we come right back against these lows again, like this market symmetry study suggests. And, same sort of thing with Litecoin. I suppose if we just do just the most recent range, like I said, I think there's a trade here, but I just don't know whether we're at the bottom just yet. So if we just do our simple reload zones, I noticed this gap jumped out at me right there. So, we have this gap down here. I think that bounds the market to the downside. I really like hunting long setups in here. So look for your momentum indicators, all that kind of stuff down in here. 38.2 seems to line up with this gap nicely here. And of course, we talked about liquidity pools. You can see how this, if I was going to like trick out my charts, that would be a key pivot and that would be a key pivot. So you can already start to see the horizontal support and resistance lining up off of just 50% of this range here. Maybe I like the idea that, our summer rally, we take the market up into this 128 area and then maybe do some consolidating. So, buyer beware, caveat emptor, all that kind of fun stuff. I really do like the idea of maybe taking a shot somewhere down in this area. Risking against this 72.5 low, looking for a test, 38.2. Let's use the gap as our target. We'll leave this on the chart. Sets up a 4.4 risk reward. That's not bad. So I'll keep this on the chart. Next sort of public video that we do, we'll review this. And so probably last thing I'll do here in this video today is let's take a look at how our ETC chart that I talked to you guys a while ago is working. So you can see there's the bottom. That's where we bought. Woohoo, look how smart we are. Interesting, I was almost a perfect AB equals CD move. Came right back down to our original level, counter trend rally, then right back down to our original level, and look what's happening. You can see potentially we have an inside bar firing here, so we might, if we're lucky, kind of like what we're seeing on the rest of the market, if we can get a move back above this candle's high here, that actually fires a little buy signal. So, whoops, the trade's just working away, just doing its thing. Okay. All right. So we'll do one viewer request. James asked me to look at where should we do this? So many charts. Woo, hello. What's going on here? Look at this. Ooh, sexy sex. Nice. That's block. I'm telling you, man, there's some really interesting looking coins out here. Jesus. DCR. All right, well, we'll do DCR. Let's see if we can. Doosh. Kind of middle of the road, eh? It's not cheap, Like it's just sitting sort of the top of value here. Ooh, that's nasty. Ouch. Suppose if I wanted to buy, I'd probably be working like reload zone orders down in here. So, I can see a buying level, reload zone, right through there. That's the POC. You can see if we accept back into value, you can see how the claw is going to take over there, right? See that? So be mindful of the claw. This is a real battle here. And if anything, what I would simply say is the market's asking whether it wants to be back into value. Quite often, usually the market will sort of, it'll touch the top of value like a hot stove. Oh, get me out of there. And really, the trend continuation trade is going to be, I think, probably just like a structural move on the other side of this trend line over here somewhere. Could probably also do a couple more trend lines. This thing's going to have a bit of resistance ahead of it. We can also do one off of here. All right. So if anything, 1, 2, 3. It's interesting how they put in this crazy ass wick here, right? There's probably a ton of people that just went nuts on the long side. Probably some guy totally fat fingered all the way up here. Poor guy. It's interesting how the market sort of worked its way up. Wicks and tails like to be eaten, all that kind of talk, right? And then ultimately rolled over here below that old high. I suppose we could even probably do one off of here now, eh? Boo-boo-boo. This is sort of more of a potential one. So my hunch is you kind of, you can sort of see the trading quadrants. For now, do we accept back into value, fill in the claw? There's the POC, right? 78.6 right against these lows. Probably would be a good idea to check to see whether we have any gaps down in here. Oh, look at Sen's script. Can you see all the gaps down in here? So, cheap ass Brian, you're going to be working bids. I'm thinking pull the chart apart, right? Oh, look at this area right down in here. Right there. Doink. All right. There's also one right there. Doink. And this happens to be off of Trex, right? So, I mean, each exchange is probably different. Looks like there's also one that day as well, eh? So there's a few gaps, right? If we zoom that out. All right, so you can see levels that probably you want to try and have that fight with are probably right down in here. And you can sort of see the cadence, right? It looks like that has to happen somewhere in through here. So this sort of August, September time period. So, I suppose if you can get on the other side of this trend line up through this level, you could use that structure. That's a bit tough because it's in kind of a crappy trade location. It's probably like a reload zone of this range here. I don't really like that. I could very easily see some back and forth though, all the way up through here. There's a lot of open empty space up in there. But kind of meh, nothing really to get too excited about. The ones that I'm super jazzed about right now are the ones that are just like, totally right against the low end of their ranges. This one isn't anymore. But look at that beautiful W that came in right there, right? And look at that. Pow! So we're back into that kind of market again. Hunt those W's, though. I'm not going to say this is going to be an easy walk in the park. This is tough trading. Oh, I like this divergence. Look at that W coming in on. I think I had this one up on the screen earlier. I don't know whether you chase this here. Let's see if this day actually finishes out like that. But I really like the look of that thing. Getting lots of W reaction. It's nice to finally see these W's coming back. I noticed IOC is just on its knees lately. We'll see if this thing can W. So, could we spend 2018? cleaning up this altcoin market and we have to sit here on our hands buying against lows for the remainder of the year? Absolutely, people. Don't kid yourself. It definitely can happen. Don't put yourself into a position where you have to have the market rally. That's not the way capitalism works. Get your money working off of half decent levels. Make sure you're taking appropriate risks. And if you have to sit on a coin and just twiddle your thumbs, well, so be it. If you're going to take shots and you're going to take a little bit bigger risk, kind of like Alex's coin here. I like taking shots on some of these names, and I did, right? If we break these lows, I'm going to get the hell out. It's just that simple. That's the trader's life. Welcome to trader's life. Cool part about it, hopefully you guys can see it. I have no idea whether this W is going to hold. You just don't know. But hopefully you can see, had you taken this little W here and just risked against this low here, right? Can you get that 2-to-1 risk reward? Well, it worked its way all the way up to about 3-to-1. So can I take this W here? Risk against these lows? 2-to-1. Takes me back up against this original structure. Eat this wick up in here. Let's see if there's any gaps up in this area to be filled in. I don't think it's unrealistic. Is it worth taking the shot to try and double my money? Sure. Well, I'm not going to say double my money. We have to be careful when using that. Just double the risk that I'm willing to take to take this shot. That's probably a better way to use that expression right now. If you can find situations where this move 2-to-1 does produce a double in price, oh my God, that's even better. Oh my God. And please let me know and show me the charts. I'll go and buy some right now. Okay, I think I blabbed away for about an hour and a half. Did you guys get any value out of any of those rants? I sure hope so. The simple message that I have to give the community here, guys, and I hope everybody, at least on YouTube, who watches the end of this, sees the power and importance of these green boxes. It worked last cycle, and if you just had the tenacity and you believed in the Bitcoin story, that as we worked our way back down into green boxes, you on balance were buyers. You could have waited for the very well-defined W's. That's perfectly fine. You could have just nibbled away. Perfectly fine. Hopefully you can see the exact same thing, exact same scenario now. That's got to be the biggest message. And as I had said earlier, hearing that the higher ups really got the public to panic and really wanted them to sell into this window makes perfect sense. That's basically everything that we teach. Okay, I think I'll leave it at that for today, guys. Have yourselves a great day. I've given you a few ideas to chew on, even a couple setups. So I hope you guys over on YouTube, we've given you some stuff to think about. I don't think it's a good idea to chase BTC here. Please, guys, let's use some responsibility here with our capital. If you're going to be hunting levels to enter, actually, there's one chart I wanted to show you guys before I take off. Let's see if I got it around here somewhere. You're around here somewhere. I know you are. Here it is. This is the chart that I've been posting on the site now through the weekend. Here was really nice. That's that RLZ tag we talked about. We got the institutions thinking bullish again, which is nice. They sort of flip-flopped here a little bit, but they're back on the bull side. So as a result, according to my trading plan, I have to be hunting long setups now that the institutions are pointing bullishly. I like the idea of the market coming back down and checking this head and shoulders breakout, but that doesn't mean it has to. 38.2 is here as well as the moving average support. My hunch, and this is sort of what I've been suggesting to people, is the market actually, I think, is just going to power its way up into these levels up here, which, we have to watch our momentum oscillators at that point if we do just power our way up for signs of divergence. Remember, we talked a little bit earlier about the liquidity pool. There's a whole bunch of stops that are just sitting up here. And, I was putting out messages on Twitter and stuff about the Chicago boys. Keep in mind, everybody, this gap still has not technically been filled in. Yes, and I warn people, be careful calling tops here because these guys, they're up to their games. Notice on Friday's session, they took this candle straight up, hit the gap level, but then crapped it right out. So technically, because there's no body to this candle, that gap has not been filled in yet. So don't be shocked if we still have to work our way up here to actually fill this gap in. So, please, everybody, understand this is number one, a lot of sort of new people to trading. You're going to get eaten up by these Chicago boys. They are professionals and they know how to work your brain. And until this gap is formally filled in, this gap is still open, right? And, we talked liquidity pools. You can see where the Chicago boys, this is actually their top right here, right? Where they got everybody rip roaring bull, rah, 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 rah. And then all these bulls are all trapped up here. You can see they brought the market up into that candle, right? Candle bodies. You've heard Brian talk lots about that. Put in the top, and then down we go. So you can totally see there's a wicked liquidity pool. There's a whole bunch of trap bears here who would desperately like to be able to get out of that trade. Trap bulls, beg your pardon. Okay, so why don't we leave it at that for today, guys? Lots of fun. You can see where the gaps are. There should be lots of playground here. And I'm still thinking path of least resistance for the time being is up, not down. All right. You guys have yourselves a great rest of your day. I sure hope that helped you guys. If any of the stuff that we've talked about here interests you, keep in mind we basically do this Monday to Friday, every day of the week for about an hour every morning. So I think the site people get really good value out of it. And of course, if you want to work within a professional structured program, we have a whole staff of instructors and TAs here on TRI to help you build your plan, identify what type of risk taker you are, really articulate how it is you're going to participate in the market, what it's going to get you to actually act, and then, of course, give you all the tools to monitor how you're doing and whether you're actually doing what you said you're going to do. That next education program starts in earnest in September. In between now and then, I'm actually going to head over to Europe and visit a whole bunch of our students there. And interestingly enough, one of our site regular contributors is coming out to the West Coast to visit a whole bunch of locals here in Vancouver too. So TRI people are moving all over the world through the summer, interacting with everybody. And by all means, if you want to be part of the community, you're more than welcome. All right. Have yourselves a great day, everybody. All the best, and bye for now.